Tilt Holdings, Inc. is a business-to-business cannabis company focused on the research, development, manufacture, distribution, and sale of products and services. The company maintains two primary divisions: technology for software and services, and infrastructure for cannabis products and devices. Revenue is generated from cannabis cultivation, the sale of flower, concentrates, oils, consumables, and topicals, vaporizer and inhalation devices, delivery and inventory management services, and licensed software. The company has operations in 40 U.S. states and Canada and Europe, and more than 1,000 dispensaries across the U.S., Canada, Puerto Rico, and Jamaica. Tilt Holdings, Inc. trades on the CSE under the ticker symbol TILT.
I'm joined now by Alex Coleman, CEO of Tilt Holdings, trading on the CSE under the symbol TILT. Alex, welcome back.
Thank you for having me.
Alex, you've just recently put out your consolidated financial statements, and I want to start with a quick conversation about your Goodwill Writedown, just because that was a remarkable occurrence. What is the explanation behind that?
Yeah, it's essentially a result of two conflicting accounting policies. On one hand, they attributed value to each asset that we put together at the time of our IPO on December 6th, where you had four companies getting together simultaneously. And the attributed value took their balance sheets and attributed goodwill based on their percentage ownership. A few weeks later at year end, based on IFRS accounting standards, specifically IAS 36, you have to actually discount back cash flows for each asset to then determine the value. Well, our company, as you know, is primarily an ecosystem company. You know, we're a partner company. We think about market reach and market share. And so in those asset pools, we have things like modulated grow facilities or business-to-business, business consumer distribution businesses. We have over 1,000 customers in retail alone and 500 OEs. And so the cash flows, if you do it by simple math, never represents the correct intrinsic value of each asset that we've put together here. And that's the conflict. And so you basically had, in a very short period of time, a write-up based on an IPO price and a write-down based on discounted cash flows, which really don't take into consideration the value of the enterprise.
Mm-hmm. Okay, so it really doesn't impact the enterprise value in any way, shape, or form.
It does not impact. There's no correlation between the write-down or the adjustment to goodwill and the enterprise value in the public markets. You could also argue, and the silver lining in this is that our earnings will be substantially higher going forward because we won't be amortizing that goodwill, and it's already taken off in one go.
Okay. One of our Twitter followers who goes by the handle The Curious Investor wanted me to ask you about Standard Farms and their production extraction plans. He says he hasn't heard much about them and feels that they're keys to the business because of their higher margins.
I don't know how to answer that. I think it's easier to answer it in the addressing what our strategy is, which is on a state-by-state basis. In order to provide the cannabis products, the devices, the software and services, that predetermines that we need assets in every state that we can then cultivate, process, package the actual cannabis products. Standard Farms from Pennsylvania and a processing license in Ohio is just part of that puzzle of putting together all the assets across all 33 states so that we can provide our customers with the products. There's nothing unique or specific about Standard Farms. It was a world-class operation when we bought it. We're currently expanding production capacity today. And like everything, we expect to match supply with the demand in the market as that unfolds. So I don't know how to answer the question specifically, other than if you look at the other states where we're doing the same thing, we always try and identify a very good foundation from which we can build.
Okay, sure. So great. You're obviously amping up the revenue. Adjusted EBITDA is improving. Where is the best source of your quality revenue at this point?
So in the front end, it's definitely devices, software, and services. Just because we've established ourselves in mostly medical markets, And as we've talked about before, demand is a little bit more restricted in medical markets than it is recreational. Our forecast expects that certainly at some point in the near future, measured in quarters, that cannabis revenue will be at least as big as devices. And it's interesting because we have about a 30% gross margin on our devices, and we have about an 85 to 90% gross margin on cannabis products. So you'll only see an uplift in our performance going forward. Furthermore, we really don't run a lot of retail, primarily because our customers are retailers, and so you'll see a lot of that profit drop to the bottom line.
Aha. Okay. And then, so on the state-by-state basis, do you have any states that you're liking better than others at this point?
Every state that converts to recreational, you expect to be the best state in the near future. So a state like Massachusetts converting to recreational, Michigan converting to recreational, those are the ones that are going to lead our revenue and profit. Following that will be the others like Ohio and Pennsylvania, et cetera, where massive population bases, but the programs aren't as developed yet.
Right. The issue of federal deprohibition in the United States, is anybody making that an election issue for the upcoming federal election at this point? And do you think that's really going to be a deciding factor among voters?
The deciding factor among voters, it's a very interesting election cycle given the economy and the usual outcome of the incumbent getting reelected. It's anybody's best guess what our current president does. He plays a little bit of three-dimensional chess. I know that we're on his desk. We're with a lot of senators and a lot of congressmen. And everyone's approaching it from a different angle. The real complexity here is what does federal legalization mean? If you look at the market data coming out of each state, you can easily project 1 million jobs and $15 billion a year in annual state tax revenue if the whole market were recreational across the country. Now, that also presupposes that we restrict it to intrastate commerce. And the reason is there's still a very robust black market, and I personally don't think that you can see those numbers if you open it up to federal legality, and then you have a place like California, which is a great state to operate in, but as everybody knows, they produce 13.5 million pounds, and they only sell 3 million pounds in state. And that's what worries me the most, is that if federal legalization doesn't take into account that existing market, which really hasn't been addressed yet.
Right. So on that note, 13 million pounds produced and only 3 million pounds sold. That seems to be emerging as a default characteristic of states that legalize recreational cannabis, but then fail to really enforce the compliance of statewide legislation on the part of market participants. And it seems like there's really not much in the way of political willpower to shut down these illegal dispensaries and grow ops. Is that something that you think represents a threat to the legitimate industry in its entirety?
Well, I think in the dry flower product, absolutely. I mean, if you look at Canada, and the reason, some are attributing it to supply chain problems. The other thing is the black market has a published price that's 58% less than the legal market. I don't know how you do that, and that country has just as an example to your question, that country left an entire 12-month period during which legal participants can only compete with the black market on dry flower. Really what happens, though, is the consumer gravitates towards, and our companies do best, is create value-added products, vape pens, edibles, tinctures, a full range of value-added SKUs. And that's really what differentiates us from the black market. I think the more time that goes on, the dry flower market becomes much less relevant, and the legal market, by simply delivering better product to the consumer, ends up prevailing. But look, it's an issue. I mean, Gavin Newsom obviously is asking the federal government for help. They didn't really look at it as a problem until they realized how much revenue they were missing and how prolific the black market is, and now they're paying attention. And it'll be an interesting case study to see what happens next. Sure.
So, I guess from the state's perspective, state governments, that one of their primary motivators in legalizing cannabis is this concept of increased taxation from, consumers of cannabis. Do you think that's going to cause more states to accelerate towards legalization, or do you think the states that have dragged their feet so far, some of them are just more conservative in nature, some of them are more religious in nature, do you think those states are forever going to be anti-cannabis, or do you think that the momentum is going to sweep them up as well at some point?
I think it'll sweep them up as well. I mean, you should have a market that evolves very similar to alcohol, where you could have a blue state, in this case, let's call it a green state, with restrictive laws. Other states are going to be more liberal. It's a natural outcome of allowing each state to define their own laws, which is what we are advocating for. You'll still have FDA oversight and all the other agencies, but I think each state should be able to decide. But really, the punchline is there's no question we're seeing an acceleration of every state focusing on recreational once they get a medical market approved, because that's the biggest challenge, right? Once you get through that hurdle and you create the acceptability among your voting constituents, and you then look at the missed jobs and the missed tax revenue by not making it recreational, it is an eventuality.
You bet. All right, Alex. Well, that's a great update. I really appreciate your time. Thank you very much for joining me today, and we'll come back to you soon.
Yeah, I really appreciate it. Thanks for having me again.
You bet. Bye for now.